Gail Rand, we brought the funky music to welcome you on today. What do you think of that?
I think it's fantastic. I'm so excited to talk to you. I feel like we just spoke 2 weeks ago, but so much has happened that I'm excited to talk to you
Well,
again.
you've been doing a lot of work for sure, but in the interim, also, there is a publicly traded company that you like to talk about that is now listed on the New York Stock Exchange, or at least part of the company is. We can talk a little bit about that. But Trulieve, today's the 11th. It was yesterday, I guess, right? So it's the 10th. We have it in our newsletter today. Not that it was a big dud, like nothing super exciting happened. Like it didn't like skyrocket. There wasn't like this influx of volume because there's a cannabis company on the stock. Like it was like, oh, there's another company, I think.
Right. And we'll see, though. I think I'm still cautiously optimistic. I think it's exciting. And this is not investment advice, of
No,
course, but it's a stigma breaker that there's a
yeah,
cannabis company on the New York Stock Exchange. And like, there's been people who've been fighting for cannabis for decades and
yes,
decades. So were they fighting for businesses to get on the New York Stock Exchange? Not so much. They were probably more advocating for full decriminalization.
sure.
But is this a path where, this will break some people's stigma and maybe can help move the ball forward, maybe even in Congress? I don't know. I'm not going to bet on that, but who knows? It could happen.
Yeah, I'd also say like of the institutions in the U.S., the New York Stock Exchange,
Yeah.
not politically, but is a fairly conservative one in what they welcome on or allow on. Like it's not. They're pretty risk averse, ironically.
And maybe the interesting part about this is that the world did not fall apart when Trulieve hit the New York
Right.
Stock Exchange,
Well,
right?
and the other part is like, and it would not that it got a shrug because it didn't get a shrug because there were people interested and excited about it, but like
Yeah.
it didn't go wild. Like it was like, oh,
Yeah.
okay, like this it's so normalized now that okay, it was already a publicly traded company for sure, just not on the New York Stock Exchange. And so, while it is a milestone and a big one at that, and the industry ought to celebrate, the bigger world was like, oh yeah, okay, that makes sense. I think.
Right. Maybe we're moving towards a place where cannabis isn't like all the drama. And maybe we're actually going to talk about the actual operations of these companies and how are they doing, right?
Good segue. You're good at this, Gail. You're really good at this. Let's refresh because for the past
Okay.
5 years, maybe a little longer, you have been tracking the gross margins of these publicly traded companies over time. And give us a little bit of the methodology. Then we'll bring up the 5 year look because I think it's fascinating.
So this is the first time I've ever done a look back. So I'm as excited as you are to talk about it, and I'll be very curious to see what you have to say. So in general, we look at the top 15 gross margins for publicly traded, primarily MSOs. We focus on vertically integrated. So sometimes there might be some large companies that are pretty much cultivation or pretty much retail that aren't included in the index. And then we do an average of them. So the way we do the average is based on the gross margin itself. So the bigger companies weight heavier in the index. So it does move things that way. So, but this is the very first time I've looked back on the 5 years that we've been doing it to try to see if there's any kind of overall trends.
And shall we bring it up and you can talk
Bring
about
it up.
overall trends? All right,
Let's do
here's the
it.
5 year look.
So probably no surprise to anybody, gross margin has been overall trending down, right? So when we started, we were at a glorious 54.2%. I'm pretty sure most people out there, maybe except for Trulieve that we'll talk about later, would love to be at that as an average. But we've kind of skipped down to like the high 40s. So we're talking about a 10% decrease in gross margin over 5 years, which is quite frankly pretty material, right, for companies, because this does tend to go directly to your bottom line. It's always possible there's some tax games played because of 280E.
Right.
And I shouldn't use the word games, but some tax strategy maybe that some companies do different things and put more things in gross margin because of their 280E approach. But it's hard to say. But overall, you can see it's not exactly been a straight trend down, but there has been an overall trend.
Right.
The second thing that I think is really interesting about this chart is towards the right of the chart, you see that there's just not as many bumps, right? So
stabilized.
It's stabilized quite a bit. And I think my guess on what that is, and I'll be curious if your audience has any other thoughts, is that they've just cleaned up their accounting, right? So instead of these fourth quarter dips where they're like, we're not going to meet our numbers, let's just throw the kitchen sink at it, which by the way is not exactly how accounting is intended to be done.
Don't say.
But it happens quite frequently outside cannabis as well. Right. But you can see those big dips in like 2021 and 2022. specifically in the fourth quarter. And
Right.
that kind of smooths itself out over time. So maybe people are getting really a better handle on their numbers, and they have stronger accounting teams looking at their numbers.
It is interesting to look at, as certainly a 10% dip over 5 years on average is a lot. And I mean, I don't know the companies you're tracking, but like some of all those companies have matured a lot over those 5 years, which I think is the inverse of actually what I'm saying, is that they maybe, or maybe this is what a cannabis company looks like right now, right? This is sort of where it is. I mean, it may be in the private. If you're private, it might be different. If you are a cultivation or just on the retail side, like it might look different. But if you're vertically integrated and publicly traded and of a certain size, this is the business.
I mean, I think so. Now that it has stabilized a little bit, it will be very, very interesting to continue to watch as there's evolution. I think a lot of this is just the price pressure. I think revenue has just gone down, and to some extent that has to do with the regulatory structure, whether, people are moving. Maybe in 2021, they were in much more in limited markets, and a lot of those limited markets have even opened up, or there's just more open markets right now. And so the price pressure has, really, quite frankly, been incredibly challenging to run a cannabis company. It's hard to plan. It's hard to manage. There's a lot of people who think at some point in time we will see bottom. I am not going to predict that, and I'm sure as heck not going to predict that on video or recording, because who knows, right? I mean, it would be great to be in that position where, some of the companies that weren't able to make it work are going to leave the space, and there's going to be less licensees, and then you're going to see some price bounce back. But we've been saying that for years, and we haven't quite seen it yet. So we'll see.
Right. And it's, I want to talk about sort of Schedule 3, certainly on the medical side. Like, will that have a difference in this as it pertains to 280E, or will you see, and this is a little bit of teasing what we're going to talk about, but like, will we see the companies split out basically the two businesses, even if they're one business in the reporting? Like, will you take a look at that as these things evolve?
I have to be honest, we're going to have to look at the data and then decide how to look at the data. It's going to get so complicated so fast. I really don't know what I'm going to do. I'm thinking I'm going to have to enlist AI. We did try to run the analysis with AI in a previous quarter. I think it was for Q3 of last year. And we could not rely on it at all. So I was not comfortable putting Grand Consulting on any AI data. Now, I've heard somebody make a recommendation recently that, you need to try AI every 6 weeks because it changes so dramatically. So I just got
a Claude update like literally this morning.
Yeah. So I'm going to try to work with AI to see if they can run this model with and match the actual data, because we do have the actual data, so we can actually validate AI pretty easily.
Right.
If that's the case, will there be a day where I can run this model for medical only, or hybrid, or just adult use would be probably the other category. I mean, I would love that. I think it's very interesting. We can talk a little bit about Q1 whenever you're ready.
Yeah, I would like to do that, because I think this blends itself into what we're talking about before, which is Trulieve, which you did talk about even last time we had you on, as a pretty interesting company in that they are big, certainly, but also mostly medical, certainly in Florida. And this is the 2026 Q1 gross margin percentages. This is that first graph of the 5 years. This is one for Q1.
This is the last bar in the chart that we did before, was 47.8, which you can point to as the average gross margin. But now this is, what does Q1 look like? And I know we just talked about Q4 two weeks ago, but that's sort of how it works with year end being closed so late. But what I wanted to look at, just because I think this time that we're living right now, I mean, it's so fascinating. I love what I do, and then other days I really love what I do. And this week is one of those days. One of those weeks. So Trulieve, for when I ran this data originally in Q1, showed a 59.3% margin. Now, they have always, not always, but they are pretty much always on the left side of the chart, if not the highest gross margin of all the companies.
Right.
Well, now they gave us pro forma data of what their company looks like when it's the new Trulieve, which is medical only, and they deconsolidated their adult use assets or their hybrid assets to a company called Harvest, and sort of deconsolidated that. So I was able to look at the data, and I just for fun, because this is what I do for fun, that you can see here in this chart, it was 59.3%. That's the combined medical and adult use, all of the old Trulieve assets. The new Trulieve, as of Wednesday, when they went public on the New York Stock Exchange, using their pro forma data, reported at a 64.4% margin. So
medical.
On medical only. So, which is fascinating. I mean, it makes a lot of sense because a lot of people believe that Florida for sure is driving their margins. But just imagine if you're on the right side of the chart, you're seeing your organic gram at 27.4%, and you're competing with somebody who's got a gross margin of 64.4%, right? Now, I know they're different businesses, and Canada is different than America, et cetera. And there's all this nuance. I think
you mean competing for investor dollars, really.
For investor dollars and for cash flow and growth, absolutely. Because a lot of times gross margin comes right to the bottom line, right? It comes right to cash flow. Not always. There's some nuance there too, but gross margin is an important stat to look at how you operate your business. Yep. So now the new numbers are going to look different. So it'll be very curious if more companies go this path of deconsolidation or whatever you want to call it. Yeah. And we look at medical, how are they going to compare to a 64.4% gross margin? I mean,
well, that, and then it brings up the other part is, yes, and that is a good number, and it's higher than sort of the aggregate number of all these companies. But like, what if Florida becomes an adult use market? Then what happens? Like, then the sort of thought experiment about what happens to Trulieve in that, are they going to switch those companies over? They're going to stay medical, but we know in every market that adds adult use to medical, the medical generally goes way down in terms of overall percentage of dollar spend. So like, it's just like, it doesn't boggle the mind. But if you were in a conference room, you need all the whiteboards to do all the scenario planning, right?
Well, or I mean, with all the money that Trulieve has spent over the past 4 years, they couldn't get it done if they're no longer going to be incentivized to move adult use. Is it going to even happen, right?
Or even more nefariously, not that this is them, but more nefariously, either spend no money or spend against it.
And I mean, to me, this is a story of like one of the most fascinating pivots that I've seen in the 13 years I've been in cannabis, right? I mean, there's no question that Kim Rivers put her money where her mouth was to try to get adult use to happen. Right. And when it didn't, she did a complete pivot and is now public on the New York Stock Exchange. I mean, fascinating. I can't, it's just such an interesting time. And hats off. I mean, I don't know that I would necessarily agree with every approach and every decision that was made, but hats off to that strategy and being willing to pivot and be thoughtful about what the future holds, given the cards you're dealt.
Well, we had this conversation. I don't know if you remember Mitchell Osak, who you met at sort of the breakfast we held in New Jersey. His point was there's so many unknowns, always unknowns. And the unknown is like, what is going to happen and when it's going to happen? Like those two things, it's impossible to predict. So if you can make the best decision at the time with the information you have, which is exactly this, right? Yes. Who knows what's going to happen in Florida, whether it's going to happen in, 2027, 2028 or ever, right? What's going to happen at the federal level, in June or July or ever, right? I mean, you just don't know. So make the best decision with the information you have and don't bank your business figuratively on what is coming down the road because you don't know when it's going to happen.
100%. And let me tag on to that and say, don't always assume that correlation is causation in cannabis, right? So like if you see somebody is getting a 64.4% gross margin in medical, everybody's going to be like, oh, I need to get into medical, right? But if we look at like Georgia licensees, I mean, I don't know what their numbers will show, but like, are they getting a 64.4% margin? And even if they are, is it on this little bit of revenue?
Certainly, and we've had them on and like their market's about to change dramatically now that they can add flower. Like and that's the thing. It's not market for market. Like what used to be medical in Minnesota was not the same that's available in Florida. Like you really can't even compare the two markets other than you can call them medical cannabis at the time, right? Like they were very, very different. Yeah,
absolutely. Yeah. I mean, when I was in the medical market in Maryland, we helped launch the market with Forward Grow and we were the first licensee. Well, that's a pretty good position to be in. When you have 3 months, you're the only person selling cannabis legally across the whole state.
That quarter looked great.
My gross margins were fantastic. We got to cash flow positive really quickly. And I am proud of that. I'm not demeaning that, but that's easier to do than coming into Maryland now. Right. Yeah. And
even if you look at this graph here, like some of these, I mean, some of them are operating only in Canada or Canada internationally. Like it's a very different business than operating almost solely in one state. that happens to be Florida, right? Like it's a very different jam.
Sure. Right. In Canada, I think the differentiation when it comes to like the products themselves is so much less than in America. Right. And you see, you know, Green Thumb, that's kind of in the middle of the chart, right? GTI is in the middle of the chart. But like, if you look at the rest of the story for them, again, you need to look at the numbers in context. The rest of their numbers are pretty good, right? Their SG&A is quite low. So they're able to have enough cash to pay their taxes, right? So it's a very interesting time, and I'm really enjoying looking at these numbers.
Well, I love this. We could do that. I mean, we could do this every quarter. I think we hopefully will. But also, it's just good to talk to you, sort of mind experiment what it all means, right? Because the numbers themselves are very compelling. What it means is very compelling. What it might mean in the future is like, you know, it's 4-dimensional chess, and it's great. Like it's great to talk about.
Absolutely. It's very interesting. I look forward to talking to you about it in future quarters to come.
Absolutely. I will make a call to action. Everybody should follow Gail Rand on LinkedIn. We'll put how to do that as the show. I'll put it in the notes of the comments, how to find you, and go see the graphs. They're going to be on her LinkedIn page as well. Gail, as always, nice to see you. Nice to talk to you. And thanks for the great information.
Great. It was great talking to you, Jay.
Thanks,
you
everybody.
so much.
We'll be back tomorrow, not with Gail, but with This Week in Cannabis, live with our friends from Cannabis Musings and High Spirits, and my co-founder, our editor-in-chief, Jeremy Burke. And Jeremy and I will actually be live from the Canadian Securities Exchange, as if we're continuing the conversation. We have a conversation with the folks at MariMed earlier in the day, which will be running next week. So it's all publicly traded all the time right now. So we're going to be right on top of it. Thanks, Gail.
Take care.